This is Terrence Andre Banks with Information Age Financial Solutions coming to you with another video about housing. It seems like we don't learn from history, and I came across this article from Zero Hedge. Freddie Mac launches 3% down mortgage with no income restrictions. The ninja environment of 2008, where no income, job, or assets is coming again to be into fruition. So when you see headings like this, you know that a crash is imminent. So I'm going to dive right into the article. Of course, I'm going to put the link in the description for you to view at your leisure. It's been a while since the U.S. made a wholesale push to get more cash and income-strapped households into the even more unaffordable American dream of owning a house. 3 years ago, to be exact, which is when the nationalized housing agency Freddie Mac last rolled out a conventional mortgage that only required a 3% down payment for certain borrowers. The problem is what modest requirement the mortgage program had back in 2015 meant that most Americans who needed access would be excluded. The program, which as we described at the time was designed for qualified, that being the key word, low and moderate income borrowers, i.e. millennials, saw limited progress over the last few years, with the FHFA director Mel Wart telling Congress last year that Freddie's 3% down program, along with a similar one from Fannie Mae, was continuing to grow. It just wasn't growing fast enough. Because while putting 3% down may not have been especially challenging for most Americans, having even the most moderate income required to go along with it was. Bear with me, Zero Hedge has a lot of advertisements, so it makes the thing slower in terms of the video, but we're going to get to it. So fast forward to last week, when Freddie Mac announced on Thursday it was about to supercharge its 3% down program and launch a widespread expansion of the offering, when it announced that it's rolling out a new conventional 3% down payment option for qualified first-time homebuyers. Effectively the same as the 2015 program, with one small difference: there will be no geographic restrictions. More importantly, there will no longer be any income restrictions. Okay, so you see the problem that's getting ready to unfold. But that makes, actually, if you think about it, it makes perfect sense in the economy we're in, because we know that the videos that I've done in the past, this economy is teetering, and even with all the expansion and they stated they're doing, income has not kept up. Jobs are still, even though they report the lowest unemployment rate since the 1960s, they don't take in consideration of the actual participation rate and actually how much income people are receiving to purchase these homes. But why worry about income? Why worry about any fundamentals? I'm being facetious and being sarcastic. It's because you can take on as much debt, and taking on debt has never been a problem with history. But before I digress, let me go right back into the article. Freddie Mac Home 1. In other words, whereas many Americans could not qualify for the original 3% down program because they lack virtually any income, that will no longer be a hindrance, and the government will effectively backstop the lack of income as a new wave of income-challenged Americans rushes in to buy houses. And he quotes this, and again, I'm putting the link in there for your description. Just bear in mind they do have a lot of advertisements, so depending on your speed of your computer and the other things you have open, it may slow it down. But look at this part here. In support of our continuing efforts to provide access to mortgage credit, we are introducing the Home One Mortgage, our newest low down payment option that will serve the needs of our first-time home buyers. Home One Mortgage has loan-to-value ratios, total loan-to-value, and or home equity line of credit, HELOC, TLV, TV, HLTV ratios above 90%. The offering complements our Home Possible offering by providing a low down payment financing options for borrowers without specific income or geographic restrictions. Assuming the new program, which is called Home One, full brochure below, puts Freddie Mac in direct competition for mortgage business with the Federal Housing Administration, but also only requires 3% down on some mortgages. Furthermore, according to Freddie Mac, this new offering is not replacing its Home Possible 3% down mortgages. Rather, the program is meant to complement the Home Possible program, which will still be available to low and moderate income borrowers. Freddie Mac's Home One Mortgage is part of the company's ongoing efforts to support responsible lending, providing sustainable homeownership and improved access to credit. Danny Gardner, Senior Vice President of Single Family Affordable Lending and Access to Credit at Freddie Mac, said in a statement. It was not quite clear how it was responsible to lend money to households which have saved only enough to put down 3% equity value. Oh, and which have no income to even give the false impression the equity stake may grow in the future. It gets better. As Housing Wire summarized in terms of Home One, Freddie Mac said the new mortgage is designed for first-time home buyers who currently made up nearly half of all home purchases. According to Freddie Mac, a Home One mortgage must be underwritten through its loan product advisor, which makes a complete risk investment based on several factors as it relates to credit, capacity, and collateral. Actually, the Home One mortgage is offered only for confirming fixed-rate mortgages that are secured by a one-unit primary residence, and at least one of the borrowers must be a first-time home buyer. There is one potential hurdle when all buyers are first-time home buyers. At least one borrower must participate in home ownership education in order to qualify for the mortgage. Yes, one may have no income and still qualify as long as one watches a few videos explaining why having an income is critical to avoiding another housing market crash or something. None of that matters, however, as the U.S. government is once again clearly mostly more interested well in truly blowing another housing bubble. We're not Countrywide or New Century, but the government itself is issuing ninja loans. That's when it started the video. No income, no job, no asset loans. The Home One mortgage will provide our customers the flexibility they need to help borrowers anywhere in the country achieve the milestone of home ownership and overcome the common down payment resource hurdle. Gardner continued. Home One is a great solution for aspiring homebuyers to grab the first rung of the property ladder and enjoy the financial and social benefits of participating in home ownership. What was unsaid is that now the rates just happen to be rising, making homes even more unaffordable and resetting our mortgages higher. The generously funded by taxpayer Home One also assures another housing crisis and even more GSE'S, Freddie, FHA bailouts in the near future. Absolutely correct. It couldn't be more spot on. The fund begins on July 29, 2018, when the new one home mortgage will become available. For more, check out the program details and marketing materials from Freddie Mac. Okay. So that's what you hear, folks. Another housing crash is imminent because you're actually creating the same environment, same aspects that led to the first one in 2008. However, we're in a much worse state. We have less income. Student loans are extremely high, and we have the second largest expansion in United States history. So what can go wrong? If this video has been any value to you, please subscribe, leave some comments. Until my next video, I'm out.